Good morning, everybody. This is Dennis Wilburn with the Active Trend Traders, and joining me from downtown San Jose, California is Hi. Are you at your office, David?
I'm at my home office
Ah,
today.
okay.
Sorry to disappoint you. You had that nice build-up.
Yeah, I know. Gosh, has had lunch with David a few weeks ago, and wow, when he is working out of his cool office, he's got just a tremendous view of all around the complete kind of valley that San Jose sits in. So David Grandy is joining us from All About Trends. Welcome, David.
Thank you. It's good to be back. Welcome, welcome everybody that's on the webinar here.
Yeah, and
good to see all of you.
So let's get going with how many are enjoying this market? How many are finding this market challenging to trade? Let me ask that question. Just show of hands. One person. No, there's more than that. Yeah, it's really been a lot of fun, but at the same time, you've had to be really quick on the trigger to both get in and out to generate much profit. So I want to remind everybody that all the materials that Dave and I do talk about they are for training purposes. We both offer opportunities to parallel or trade with us in tandem, but those are not recommendations of trade. It's just these are the trades we're taking. It's up to each individual trader to assess and evaluate their own risk management profile, and that traders, I always encourage the members of Active Trend Trading, I know David does the same, to paper trade any new method prior to the risk of personal capital. Very important. I want to remind everybody that as you can probably tell if you've been dialing into the Active Trend or to the How to Make Money Trading Stock Show, that you know David and I love to talk about stocks. We've got a couple of just very powerful presentations, and we can link in with any group anywhere in the world via webinar and do either a presentation on the art of trend trading or how to benefit from alternative entries. And this one here on alternative entries is kind of there's a hidden thing in there, is that the actual long name of it is The Truth About IBD Breakouts and Alternative Entries. So it's kind of interesting. It's a lot of fun. We provided that presentation a couple of weeks ago, and then this last weekend for the Bay Area Moneymakers. But just give me an email. I know I'm excited. I get to present next week to the Delaware IBD Meetup Group. So the market this week, the market is breaking out to new highs. The all-time high on the NASDAQ is, about 10% away of that now, and it's pushing higher. The S&P is up, but it looks to be the weak sister amongst the other indices. And the Russell has broken out from last year's trading range, and it's maintained that breakout, although even though we got just a slight little sell-off today, it held at the 8-day moving average and is starting to proceed up. What to look forward to? What could propel the market one way or the other coming into next week? One, over the next 2 weeks is when we get in, the last of the heavy pieces of earnings is going on. Greece is still in the news. My question is, does Greece matter? Some people say yes, some people say no. It seems like the overall kind of what the people are saying is that basically, Greece itself doesn't matter that much, but they're really, really fearful of the potential domino effect if Greece goes down and its disturbance within the European Union. And then, of course, something that we has become too real in our current lifetimes is the terror threat that continues to at least be reported on quite a bit. We see that in various types of social media and on the news. And then the concern throughout the rest of the world is the lack of United States leadership in combating the terror threat. So bad news in any of those areas could, at least give the market a temporary downside pick, push to the downside. But at this particular point, because the uptrend is now in gear, any of those little pushbacks or pullbacks might set up potential buying opportunities. And as you can see last week, basically we just, the breakout was an exhaustion on the NASDAQ. Well, it proved this week, no, it wasn't. And while there may be some I would say, dark clouds on the horizon with regarding the, and when you look at the longer-term weekly charts on the indices, we don't argue with the price action, and right now the price action is pushing up. So let's take a look at the percentage of stock above the 20-day moving average. This is one of the places where I look, and there is I won't say it's concern, but as you can see, as the market has been making new highs during this past week, this particular index did not. And what this does is it measures the percentage of stocks on the NYSE. It's a large number of stocks that are above its 20-day moving average. And as you can see, over the last couple of periods, you've got that high, this high here got way up into the reversal zone. And what it's telling us is that while the market is pushing to new highs, there's fewer stocks actually participating in that surge. Now, is that a temporary thing, or does it, provide us some clues about the underlying aspect of the stock market? Because we know that part of the indices like the S&P, the NASDAQ, the big dog in both of those indexes, of course, Apple. Apple's been on a tear here lately. So a lot of the upside is riding on just a few stocks. Does it say, hey, it's time to cut your, get out, take off, head for the mountains? No, it's not saying that, because the price action itself is still heading up. So let's take a look at the charts. I found this graphic. Isn't that a cool graphic with the magnifying glass? You like that graphic, David? I like the graphic, Dave. And what I like about it also is
that's awesome.
It's candlesticks, so I'm a candlestick guy, and I just, oh well. Sorry if I got off course a little bit. So let's take a look at the SPX. The chart on the right is the weekly chart. The chart on the left is the daily charts. And what's interesting is when we sit there and we look at these individual stocks, or individual charts, the weekly and the daily over here on the left, while we may come in and say, okay, hey, we've gotten some negative divergence on the true strength indicator, which is an indication of the internals on the S&P, some negative divergence. See, this is pushing up the new highs. However, the momentum, which kind of relates back to the previous chart we saw on the percentage of stocks above the 20-day, is reflecting that. The momentum isn't quite as vigorous on a weekly basis as it has been, in the past when we were pushing up to make these new highs just before Christmas. As we see here, the S&P did a nice little breakout above this level here this past week, and right now that breakout's holding. And as I said earlier, we get a nice pullback today to the 8-day moving average, and a rebound right back up to a level of resistance. There is a level of resistance on the S&P that's sitting here just above 2100. If it is broken, then we will potentially move on up. And where is it likely to go? Well, it's likely to go on up here to the 2150, or even up to the top of the uptrending channel. it could very well go that high, because we can just basically take this measurement here. And if I get, what's the technical measurement telling us? It is telling us that if we go, there is the breakout to there, so that's about a 4% gain. And if we just take that and extend it upward, I'm going to activate that and just move it up to the breakout point. Look where it takes us. It takes us right up to just shy of the 2150. And so from a technical standpoint, that's our upside target where we would anticipate the price action turning around. I want to throw on, as long as we're looking at potentials, let's throw on just a real quick Fibonacci retracement on this. Except you have to retrace it the right way. From just this trading channel, and pop that in. And it would actually take us, right now we're sitting just below, isn't that interesting how we're sitting right below the 138% retracement from this low, let me draw that in there properly, folks. Remove. I got overzealous. As you can see, now we're sitting right above the 138. The 161% retracement from the low to the high puts us up here about 21.14, and then of course this would be about almost a 200% retracement if it made it all the way to the top there. So it's sitting there right in that little zone. Very interesting how these Fibonacci's oftentimes work out to show hidden levels of support and resistance. Let's take a look at the NASDAQ. NASDAQ has been the most, from what I've seen, the NASDAQ has been the most impressive of the indices thus far after this breakout. As you can see, it broke out 5 days ago. That was last Friday, and has just proceeded. It has not looked back. It's come back and done the candle retest on the little short candle pullbacks, but it's just pushing higher. How far are we away from? There's the all-time high up here at 48.16, and currently we are sitting at less than 10%. Matter of fact, less than 9% away from the all-time high that was set back in. You know what month the all-time high was set, Dave?
March.
Of what year?
March?
March of
what, 2000, 2001?
2000. I have to check. I have to keep asking Dave's question because he gets focused on something else. But yeah, 2000, and so that was the all-time high. And that was interesting times in the market. So let's take a look at the Russell. You can do the same type of measurement technique in doing either the technical extension and or run the Fibonacci's to get what the potential Fibonacci's are based on this trading range here. Totally an accurate and a good way to go. Here's what I like about the Russell's looking right now a little bit more like the S&P. It had been looking a little bit stronger, but one thing that I like about the Russell is that its moving averages have accelerated now with a nice upslope. We are increasing this gap back to above the 20-day. Those tend to not last too long without some sort of a pullback because the a reversion to the mean. As we can see today, right off the 8-day moving average, it has pushed back up, and it actually currently, the Russell, is in new high level. And also, so when we get a nice breakout like this, what that typically means is now there's no overhead resistance and or supply where the sellers are coming in. We just have to look for the new place where the sellers start coming in. And at this particular point, the sellers have not showed up in a big way. Matter of fact, the sellers did show up this morning, opened here, pushed all the way down to the 8, but then right at the 8-day moving average, the buyers came back in and started pushing this index back up. I want to show everybody just one real quick thing before I turn it over to Dave. You know, I like to trade TNA. So get a picture of the, now TNA is a 3-time leveraged vehicle on the Russell. And as you can see with TNA, because of how they have to buy derivatives to match the Russell, it is, as you can see, not really making a new high. And it's part of what's called backwardation, or on the derivatives that they buy to emulate the TNA, the Russell, and make 3 times the daily average. And so as you can see, this hasn't pushed up high, you know, as high. So whenever you're looking at trading potentially TNA, take a look at the charts of either IWM or the Russell to get the real picture on what the Russell is doing with regards to both breaking to new highs and additionally what they're doing with their moving averages if you're playing moving average bounces. So Dave, that's all I got for today. What do you think? Are you ready to go long?
I thought that was great, Dennis, and I'm already long, so
okay.
You know, I'm just gonna keep doing that until the charts of the stock tell me not to.
Okay. Well, I'm switching the screen over to you. And folks, if you do have any questions, I will be muting myself and answering questions. And then towards the end, we will be taking a look at individual stocks. Go, Dave.
Okay. So, yeah, finally we have a market acting strong again. We're out. It seems like the volatility has been put to rest, at least for now, because January wasn't really all that fun. It was really difficult to trade that market and kind of taxing on those of us that watch it regularly. So, yeah, and like you said, we're out of the trading range finally on the NASDAQ, and we're consolidating near the highs in a sideways manner on the S&P, and that's very constructive. So, and many leading stocks are doing the same. So, seeing a lot of good structure right now in the market. Don't really have much to complain about. Here's the S&P, again, just trading sideways here at the old highs with support levels not too far below. So, you know, for us, our trading plan, we don't chase stocks. We let them come to us. We buy stocks at support and sell at resistance. And, you know, we're definitely closer to resistance on the S&P than we are support. So, you know, I wouldn't be too disappointed to see the market pull back a little bit here. That'll set up some really good opportunities for us. But in the meantime, there still are some opportunities, and if you are already long the market, you know, the market's not giving us any reason to change that. And as long as your stocks aren't doing that as well, then there's really no problems. So we just trade what we see. Not what we think, hear, or fear, and so what we're seeing is some pretty constructive action and no real reason to run for the hills or anything. There's been a lot of talk about the energy sector and how oversold everything is, and we've talked about this before with a couple other stocks, and here's yet another example. When we're looking for stocks that have been in prolonged downtrends or prolonged uptrends, and we want to take advantage of a potential change in trend, we need to, it first starts off with either a topping pattern, either as a double bottom or a double top. So in downtrending stocks, the pattern, we're looking for a bottoming pattern here, which is typically a double bottom, and we came close to that here with Green Plains. And then we have this big first move up, which we call a first thrust up. But we don't just go buy it here as soon as it breaks above the 50-day moving average. We need to wait and see what that initial pullback is going to be, because it's already made quite a big move here from 20 to 28 or so in a couple weeks. So that's not sustainable, and we want to see that gain get digested, which is exactly what's happening now. And so if we see this gain continue to be digested and come back down here and test support at the blue line, which happens to coincide also with the 50-day moving average, and then it moves higher, then that is our confirmation that the stock has changed its trend from down to up, and allows us to go long on the stock and take advantage of its efforts to potentially build the right side of a cup base here. And this is a stock too that fundamentally really hasn't had any deterioration. It's just simply caught up in the downdraft of the sector that it's in, and as long as the fundamentals stay the same, these are stocks we want to look for as an opportunity to take advantage of, as long as they give us that confirmation. The first thrust up, then the pullback off highs, and then a move higher. So this is all looking very good here. There's a lot of stocks out there that look like that too, that are making initial moves. Trip Advisor, it broke above its 50-day again just recently, this week. Arista Networks, ANET, is doing that, did that yesterday and is following through today after earnings. So there's I think, Dennis, you were talking about Habit, where it too is building the bottom of a cup here, and we're just waiting for it to break back above the 50-day. There's a lot of stocks out there that I see doing these bottoming patterns right now and making initial attempts to start building the right side. So there's a lot of action in that area. This is just one of them, and we have more in our newsletter to show you. So that's kind of all I have really to show today is just that one, because that's kind of where the action is right now, and everything else is pretty extended. So we need to wait for a little bit more of a healthy pullback in the indexes to set up some opportunities there. So that's what we're doing. We're just trading what we see and taking the trades as they trigger, and Green Plains is definitely high up on our list here. So if you want to see more of what we're doing and get our complete watch list and get more education on that pattern that I just showed you, as well as the other patterns that we trade from, go to our website, sign up for our 15-day free trial, and just all you need to do is send us the email you want the newsletter sent to. There's no credit card or anything needed, and we'll be glad to send that to you for completely free for 15 days. You get a newsletter every single trading day, as well as one on the weekend. Pretty comprehensive. When stocks on our watch list trigger trades, we'll send out alerts that we're buying so many shares of the stock at this price. So we make it really easy for you to trade in tandem with us, and even if you want to start off doing paper trades, it's very easy to track the performance of our service. So I think that's it, Dennis.
Hey, here, let me take myself off mute. Thanks, David. Yeah, it's been kind of quiet, and as you said, as the market has pushed up towards its new highs, there are some really nice setups starting to take place on some of the stocks that maybe lag in the market a little bit, but at the same time, once they start their move, it's a good thing to be in them. So, yeah, just a reminder, everybody, that David and I basically represent two different companies. He represents All About Trends, and I am the active trend trading or active trend trader. There is a difference in the way we do approach particular stocks. We do cover and look at some of the similar same stocks, but I always focus on basically, I believe in the 5 pillars of active trend trading. And actually, it's the 5 pillars that defines. Can you hear me now? Can you guys hear me okay?
Yeah, just fine.
Okay, and you can see my screen.
Yes.
Okay. Basically, there's 5 pillars of any system in reality. This could apply to any systems that are out there. And if any of the systems are missing one of the pillars, you have to really kind of question yourself and go, this may not be the system for me. And one of the things that we do is I believe that a person has to know a great system, and then you apply strategies to what you know. So with the active trend trading system, pillar 1, what to trade. We only trade top quality IBD growth stocks and index ETFs, and that can be the 3-time leverage index ETFs. Second pillar is when to enter. What are the entry action points? What are in strategically defining them? When to exit, both for protection of, stop losses and profit targets, and then what strategy to use. Do we do an option call? Do we do an option strategy? Do we do a stock strategy? And then what to expect is also a very important piece of every system. Here's a recent trade. We did this trade, started on the 10th, and we were utilizing and this is what we call a earnings run, our pre-earnings run trade. We entered on a candlestick pullback at this point here, and that's a special pattern that is used with candlesticks. And we were triggered, and this was a conditional order, so people were at work. If they put in the order, they were filled at about $20.56. Then it reversed up and started running up. It flirted and teased us here at the 22 level because that was our first profit target. We sold half of the position at that on 228 at $22.03 or somewhere around there. And then we're currently holding the rest of the stocks, rest of our shares until just before earnings, hopefully all the way till the 26th of February, where if we do not hit our target profit zone, which is up in this area, 24 to about 25, just a little bit over 25.50, then we will go ahead and close that position out for somewhere. Currently our position is up 9%. Our target return on the remaining shares is somewhere between 16 to 24%. So on every trade, what I provide is I strategically identify where to enter, what strategy I'm using, where to exit. That includes profit targets and the stop losses. And one of the things that one of our active trend trading members he sent me a spreadsheet, and he has taken the active trend trading system and started trading options with it. And on this particular trade, he bought the March 2250 calls slightly out of the money, one strike place out of the money, with the anticipation, and he started taking profit off the table when he was 45% up on the option trade. So way to go, Andy. Here's what we have done this week. We bought the stock. We closed out for 7.15 gain. The remaining stocks are sitting about 9.4%. Currently, our margin account is up about 1.47%. It's right about the market. The IRA is up a little bit more. And so I'm always looking for a clear and simple way to add new features that will will be a benefit to the active trend trading members. And starting this next week, we'll be doing simple option strategies. They'll start next week for both monthly and weekly options. And then our midweek market sanity check training will be going over these strategies. And then additionally, I will be adding new training videos by the end of February. I was able to pick up a really good video editing program, and I'll be putting out videos straight from that. And so I'm really excited about that. So, oh yeah, I almost forgot about this part. Is currently we have a limited time on a 1-month trial membership for only $4.99. And what that is, it gives you total access to our website, total access to text alerts, training videos, midweek market webinars, email alerts, and the active trend trading. You can find more about it at, here's the trial link. And if you want to just bypass it and just go straight for the membership, I do offer a 40% discount to the people who join us on how to make money trading stocks, and you can find out about that at this website right here. So, Dave, that's all I have for today. I'm really excited. I want to when we get to the stocks, I have a couple of potential picks that are looking pretty good, and that I want to share with folks. And so, you got anything else, Dave?
I don't.
Okay, I want to leave everything up right here for a second because it shows here's David's contact information here. Here's my contact information there. And so I'm going to conclude this part of the webinar by just saying, like I said, see you guys next week. It'll be the last Friday in February for 2015. Keep your egg growing and trade wisely and trade profitably. Thanks for joining us today. Dave, thanks for being there.
My pleasure.
Okay.